Hello, and welcome to this Employment Standards information session on averaging arrangements. Please be aware of our disclaimer and copyright notice. Basically, we've made every effort to give you the correct information. But if there are any discrepancies between this presentation and the Employment Standards Code, the code will prevail. The copyright on this presentation belongs to the Government of Alberta. The goals for this presentation are to provide you with an in-depth overview of Alberta Employment Standards rules around averaging arrangements. Although this session is specific to averaging arrangements, it does cover a few other basic employment standards rules. For a complete list of other rules that may apply to you, please visit our website linked on the slide here. Topics in this presentation include averaging arrangements, rules for scheduling, overtime, directors and ministerial variances, examples of averaging arrangements and calculations, how to handle previous arrangements and agreements, as well as a wrap-up and direction to our other resources. So let's begin. Averaging arrangements are similar to, but replace previous averaging agreements. Employers may require or permit employees to follow an averaging arrangement. This can be done on either an individual or a group basis. An arrangement allows the employer to average an employee's hours of work over a period of 1 to 52 weeks for the purpose of determining the employee's entitlement to overtime pay or time off with pay. Averaging arrangements may also be entered into as part of a collective agreement. There is no maximum term now for averaging arrangements. This means the arrangements do not expire and do not have to be renewed. Previously, the maximum term for averaging agreements was 2 years. Averaging arrangements that are entered through a collective agreement are more flexible and do not need to follow requirements for cancellations, notice processes, shift schedules, shift changes, and overtime rules. We'll highlight areas where other collective agreement rules apply throughout the presentation. Unless otherwise specified by a collective agreement, arrangements must be in writing, specify the number of weeks over which the hours will be averaged, include a schedule setting out the daily and weekly hours of work for the averaging period. In respect to schedules, this means that for a 52-week averaging period, the employee should know exactly which day they work and how many hours they're scheduled per day for a full year. Shifts and schedules can be changed, however, and we'll look at how that works in the coming slides. Employers can also choose to add specific items to the written arrangement. They can include specific processes for the following items if they want to amend the schedule: the way in which the employer will amend the schedule, the amount of notice required to be given to the employee, and how notice is given, either verbally or in writing. The arrangement must also specify how overtime pay and banked overtime is calculated. Now that you know what you need for a valid arrangement, let's look at what the notice requirements are. Employers should provide 24 hours advance notice of a shift change unless an accident occurs, urgent work is necessary, unforeseeable circumstances arise, or if the employer specifies different notice provisions in the arrangement itself. Collective agreements can specify alternate methods to notify employees of shift changes. An employer must give at least 2 weeks written notice of a requirement to work an arrangement to each employee it applies to, unless agreed to otherwise within a collective agreement, or if the employer and employee agree to a different notice period. An employer is not required to provide 2 weeks written notice to a new employee if written notice was given to the employee before employment began. Now, before the arrangement starts, the employers must provide a written copy of the arrangement to each employee subject to the arrangement. This includes when the arrangement is canceled and replaced, a copy of the new arrangement must be given. In the case of an arrangement that applies to a group of employees, The employer must provide each individual employee with the arrangement and post the arrangement on the employer's internal website, if they have one, and in one or more conspicuous places in the workplace where it may be viewed by the employees subject to the arrangement, like maybe a lunchroom or a break room. Employers may also cancel and require the employee or group of employees to work a different arrangement by providing 2 weeks written notice. 2 weeks of written notice is not required if there is an accident, urgent work is necessary, or other unforeseeable circumstances arise. If there is a collective agreement that states otherwise, cancellations to an arrangement must be in accordance with the collective agreement. Scheduled daily and weekly hours are the only aspects of an averaging arrangement that can be changed. To change any other aspect of an arrangement that is in place, for example, the daily overtime threshold, notice of work times, or even the number of weeks of the averaging period, the employer would need to cancel and replace the arrangement in whole. Employees are not able to cancel an arrangement, and only the employer may do so. The Director of Employment Standards may also cancel an arrangement at any time. This would occur in cases such as chronic non-compliance with other entitlements or clear indications that the arrangement is invalid. Let's move on to scheduling. In general, the code requires that hours of work do not exceed 12 hours in any one day unless an accident occurs, urgent work is necessary, or other unforeseeable or unpreventable circumstances occur. And in those cases, the hours of work will increase only to the extent necessary as a means of avoiding serious interference with business operations and the safety of the individuals working there. Therefore, schedules under an averaging arrangement should not exceed 12 hours per day. However, if an employee is part of an exemption, then their overtime hours in the arrangement are subject to those other overtime thresholds. For example, road building or heavy construction employees have a maximum of 16 hours of work in one day. Therefore, employers may schedule up to 16 hours in their arrangements for those employees. Any exemptions are set out in the Employment Standards Regulation. Please visit our website to find out more. Additionally, employers may apply for a variance to authorize or extend hours of work. And this hours of work rule is often called the hours of work confined. This means that if someone starts their shift at 7 a.m., they should normally not be scheduled to work past 7 p.m., even if they were not actively performing work within those 12 hours. Split shifts, for example, are still subject to hours of work confined. Rest periods required within a shift are no different for averaging arrangements. In general, breaks are unpaid. Employers may choose to pay for breaks if they want to. Employees that work shifts for 5 hours or less will not be entitled to a break. If employees work more than 5 hours but less than 10, they are entitled to one 30-minute break. If employees work 10 hours or more, they are entitled to at least two 30-minute breaks. As was the case previously, if both parties agree, they can split the 30-minute break into two 15-minute breaks. In addition to the changes, there are new rules regarding when breaks are provided if the employer and employee cannot agree on a rest period schedule. If an employer and employee cannot agree on a rest period schedule, the employer must provide at least 30 minutes within or immediately following the first 5 hours of the shift at the time chosen by the employer. If the shift is more than 10 hours, the employer must provide a second rest period of at least 30 minutes after the first 5 hours of the shift. Exceptions to this rule would be if one of the following occurs. Of course, an accident, urgent work, or other unforeseeable or unpreventable circumstances. There also may be different break arrangements that have been made through a collective agreement. There may be some cases it's not reasonable for the employee to take a rest period. If the employee is unable to take their rest period, then it must be paid. Additionally, days of rest under an averaging arrangement are no different. Many employees receive 2 days off every week. However, the minimum requirement for rest is 1 day off in each work week. A work week is considered to be 7 consecutive days. As you can see in the chart on the slide, the number of work weeks and required rest days can be combined. Employees must receive at least 1 day off in each consecutive work week or 2 consecutive days off in 2 consecutive weeks, and so on. However, an employee who worked 24 days straight must receive at least 4 consecutive days off. As mentioned previously, scheduled daily and weekly hours are the only aspects of an averaging arrangement that can be changed. When changing employees from one shift to another, an employer must give at least 24 hours written notice to all affected employees, and the employer must give 8 hours of rest between shifts. The 24-hour notice requirement for shift changes doesn't always apply, however. The requirement is waived if the schedule is amended because an accident has occurred, urgent work is necessary, or there are other unforeseeable or unpreventable circumstances. We spoke earlier about special language in the arrangement that permits alternative processes for shift changes. Employers can specify different processes for the way in which an employer will amend the schedule of daily and weekly hours of work, and/or the amount of notice required to be given to the employee for schedule changes, if it's less than 24 hours, and how the notice must be given, either verbally or in writing. For example, if the arrangement specifies that the employer can provide 24 hours verbal notice to cancel or add shifts, this would be permitted because it's written in the arrangement. Also note that there are no longer specified requirements for missed shifts. So subject to collective agreements, this means employers can determine how missed shifts are addressed. Let's have a look at overtime. Here are the daily overtime thresholds. These thresholds are similar to what we used in the previous hours of work averaging arrangements, with the exception of the last box. This specifies that there may be different thresholds set out in the arrangement itself, and we'll go into that on the next slide. So, if not otherwise specified in the arrangement, an employee is entitled to overtime if their hours of work exceed 8 hours in a day, if scheduled for less than 8 hours, or the daily scheduled hours, if 8 or more hours are scheduled. Employers have a few other options regarding the calculation of daily overtime. Employers can choose to include daily overtime, but specify different thresholds for daily overtime. Or employers may specify that the employees are not entitled to daily overtime at all. As mentioned previously, employers must include those details in the written arrangement. If the arrangement is already in place and the employer wishes to remove or modify daily overtime thresholds, they must cancel and replace the arrangement and follow the appropriate notice requirements to do so. If the arrangement is silent on how daily overtime is treated, then the calculation defaults to the standard overtime threshold. Although daily overtime doesn't have to be part of an arrangement, averaging period overtime will always remain. Averaging period overtime applies for all averaging arrangements, even if daily overtime is not applicable. Averaging period overtime hours are determined by reviewing the hours of work over 44 in a week for a single week schedule, or hours of work over an average of 44 per week in a multi-week schedule. The weekly overtime threshold specified above does not apply if a different weekly or average weekly provision are agreed to under a collective agreement. This averaging period overtime threshold is in place even if there are other weekly overtime thresholds that the employee is subject to under the regulation. For example, the trucking industry has a weekly overtime threshold of 50 hours above 50 hours per week. Upon entering into an averaging arrangement, the average weekly threshold becomes a maximum of 44 hours per week before overtime triggers. Employers must review an employee's entitlement to overtime by comparing their daily overtime hours, if applicable, and averaging period overtime, and pay the greater of the two. As usual, all overtime must be paid at a rate of at least 1.5 times the regular rate of pay, or bank time off is given at a rate of 1 hour banked for 1 hour of overtime as part of an overtime agreement. Daily overtime, if applicable, is to be paid to an employee within 10 days after the end of the pay period in which it was earned. Averaging period overtime is paid 10 days after the end of the pay period in which the averaging period ended. This could mean that the end of the 52 weeks for a 52-week averaging period. As daily overtime gets paid in a pay period and averaged weekly overtime at the end of the averaging period, if the averaging period overtime is greater, the employer must reconcile the greater hours with what was already paid. Essentially, you need to take the averaging period overtime, subtract the daily overtime previously paid, and get the overtime owing. We will go through some of those examples later on to help you visualize this. When an employee takes bank time off, those hours and the subsequent payment are considered wages. These wages are to be considered when calculating vacation pay and general holiday pay entitlements. Since I touched on the ability of banked overtime agreements being valid in conjunction with an averaging arrangement, let's quickly review the banked overtime requirements. Banked overtime agreements must be written and entered into separately with an individual employee or with a group of employees. Regular banked overtime rules apply and are listed on the slide here. Please visit the link on this slide to review more requirements for banked overtime. There may be interruptions in averaging periods due to cancellations by the employer or the Director of Employment Standards. If the employer cancels the original arrangement and replaces it with a new one, or the employee ceases to be subject to the arrangement, like a termination of employment, or the employee quits. When this happens, the employer must calculate overtime. The employer must consider all hours the employee has already worked and review the schedule to see what the employee would have worked. The averaging period overtime calculation takes into account all hours as if the employee worked the remaining scheduled shifts in the averaging period. The employer must then review any daily or averaging period overtime entitlements. We'll also go through an example of this later on in our presentation. I spoke briefly about variances and want to provide you that information today as well. Now, you may be asking, what is a variance? A variance allows the Director of Employment Standards or the Minister of Labor and Immigration to vary the rules that employers or group of employers must follow. You can apply for a variance at any time, though recent rule changes resulted for further flexibility. Let's take a look at directors' variances. As of August 15, 2020, in addition to individual employers, groups of employers, and employer associations may now apply for directors' variances. And since September 30th, the director is no longer required to review certain application criteria prior to issuing a variance or exemption. Previously, the director had to take into consideration an employer's ES and OH&S compliance history, the employer's rationale, and whether there is employee support. Removing these requirements to review such information streamlines the variance and exemption processes. Areas for a director's variance were changed to be more open-ended, citing sections of the code or regulation rather than specific terms the director can vary. As of September 30th, the director's scope includes hours of work confined, notice of work times, rest periods, days of rest, overtime hours, 3 hours minimum, averaging periods of an averaging arrangement. Now let's look at ministerial variances and exemptions. Changes to ministerial orders became effective as well on August 15, 2020. Single employers are now able to apply for ministerial orders as well. A request for a ministerial order may be made in respect to any part of the code or regulation and is not limited in scope like the previously discussed director's variance. Previously, ministerial orders were for a maximum term of 2 years and could not be renewed, but both of those requirements are now removed. Now that we've reviewed some general employment standards rules and all the rules around averaging arrangements, let's review some visual examples to help you understand a little more about how these arrangements work. Here is an example where the employee worked a 4-on and 2-off schedule. This averaging period is for 6 weeks in total. They were scheduled and worked 8 hours per day on the weekends and 10 hours per day during the weekdays. The employer in this case has indicated that standard daily overtime rules apply. This means that daily overtime applies for hours worked in excess of 8 hours in a day if scheduled for less than 8, or daily scheduled hours if 8 or more hours were scheduled. It doesn't appear as though daily overtime is applicable, as the employee didn't have to stay beyond their scheduled hours. In this scenario, where the standard daily overtime applies, if a shift gets scheduled on a day off, the same rules apply for daily overtime hours. Any hours worked beyond the scheduled hours would be considered overtime. When the overtime rules specified are different, such as different overtime thresholds or no daily overtime, it is possible that hours worked on a day off will contribute to average weekly overtime only. It would be important to review in each specific situation how daily overtime is calculated. For this scenario, hours worked on a day off would also be added to the total hours worked to determine the average hours per week at the end of the averaging period. We note that the average hours worked over the 6-week period is 44. This means any hours worked outside of the schedule will have overtime implications. A reminder that any hours worked over an average of 44 hours a week is considered overtime. This is because the average already being 44 hours a week, then any time beyond that will increase the average over 44. This is another example of an arrangement. This time, the averaging period is 12 weeks. The employee is paid for 11 hours per day. The employer in this case has indicated in the written arrangement that daily overtime does not apply. So if an employee ends up working 14 hours due to accident or urgent work, then those extra hours will be at regular pay, and the hours are then added into the weekly average to review at the end of the averaging period. If the employee had to come in to work on a day off, then all hours worked for the day off would contribute to averaging period overtime only, which may be payable. There is some room for additional hours of work since the weekly overtime threshold is 44, and you can see in this example that the scheduled average is only 38.5 hours per week. You might also note that there's a specific pattern for this example and the last example. In practice, schedules do not have to follow a consistent pattern. They don't need to be 4 on or 4 off or any other recurring pattern. As long as the employee is aware of their schedule before the averaging period begins, and the schedule takes into consideration the regular rules for days of rest in a week, any combination of days worked and days off is permitted. Here's another example of a 12-week arrangement. This employee worked 5 10-hour shifts followed by 2 days off over a 12-week averaging period. The employee got a full week off on the 6th week and on the last week. The employee worked an average of 41.67 hours per week. The employer has indicated that standard overtime rules apply. Let's review a scenario where there was urgent work during the averaging period. Let's look at what happens when the employee worked 2 extra shifts on their days off. A reminder again that daily overtime is part of the arrangement, so overtime is those hours over 8 per day if less than 8 are scheduled, or over the scheduled hours if 8 or more are scheduled. Although days off are originally 0-hour shifts, we would actually base the overtime on the new scheduled hours. So if on Tuesday of week 6, the employee was scheduled and worked 11 hours, we would look at daily overtime based on the hours beyond 11. And this would be the same for Wednesday on week 6, where the employee was scheduled and worked another 11 hours. This changes the weekly hours for week 6 from 0 to 22. If there are no other extra shifts or extra hours in the period, we need to review if those extra 22 hours contributed to overtime. We know that there is no daily overtime entitlement as the employee never worked beyond their scheduled hours on each day. So then we add up all hours to get 522 hours in total, divide that by 12 weeks, which is the number of weeks in the averaging period, and the total is 43.5 hours worked per week on average. As this number is below the 44-hour threshold, there is no overtime owed, even though the employee worked on 2 scheduled days off. For this averaging period, the employee would have worked 522 total hours and be entitled to straight time pay for all of those hours. Let's use that previous schedule in its original form to determine what happens when there is an interruption in the arrangement. Interruptions could be a cancellation of the arrangement by the employer, the Director of Employment Standards, if the employee no longer works for the employer or is otherwise no longer subject to the arrangement. A reminder that if the employer plans to cancel the arrangement or cancel and replace the arrangement, then they must provide 2 weeks advance written notice unless agreed to or otherwise established by a collective agreement. For this example, we'll say that on Thursday, on the 8th week of the averaging period, the employee's employment ended. Although the employee didn't work the rest of the scheduled hours, the employer must review those anticipated hours in the remaining weeks for the calculation. The rest of week 8, 9, 10, and all of week 11 have scheduled hours remaining that must be applied to the weekly average calculation as if the employee did work. And if there were pre-scheduled hours in week 12, then they would have to include those hours as well. Let's review a scenario that has a few more changes in it. Note that there is no specific pattern. As mentioned previously, arrangements need to be scheduled in advance, but do not need to follow a pattern like 4 on and 4 off, or 1 week on and 1 week off. In this scenario, the employer has written in the arrangement that daily overtime is payable for hours over 10 in a day. In week 1, since hours do not exceed the daily overtime threshold of 10 hours per day, no daily overtime is owing. In week 2, we see that there's overtime scheduled for Tuesday, since hours exceed the overtime threshold of 10. The next day, the employee is scheduled to work 9 hours, but instead works 10. No overtime for this period as the 10-hour threshold has not been exceeded. On the next day, on Thursday, the employee is scheduled for 10 hours, but works 12. There are 2 daily overtime hours here, as this exceeds the 10-hour threshold. On Friday in that same week, the employee is meant to have a day off, but instead they're asked to come in for 7 hours. Again, no daily overtime here as the 10-hour threshold has not been met. In total, the weekly hours changes from 38 to 48. We have to keep this in mind for our averaging period overtime. Everything in week 3 is the same, and there are no extra shifts and no extra hours for that week. In week 4, the employee is meant to work 6 hours on Thursday, but instead works 8. Again, since the hours did not exceed the daily threshold of 10 hours per day, there is no daily overtime. The next day was supposed to be a 4-hour shift, but it turned into a 12-hour shift. And here we see there are 2 hours above the overtime threshold for that day. Our weekly total for week 4 is now at 48. With our grand total of hours worked for the 4 weeks changed to 196. Our average weekly hours have now increased to 49. We receive that number by dividing 196 total hours worked by the 4 weeks in the averaging period. Now we need to calculate daily versus averaging period overtime and pay whichever is greater. First, let's review the total daily overtime in the 4 weeks. I'll mention again that even though the employee worked many extra hours, daily overtime is for hours exceeding 10 hours per day, as per this employer's written arrangement. Daily overtime is 0 hours in week 1, 3 hours in week 2, 0 hours in week 3, and finally 2 hours in week 4. This is a total of 5 daily overtime hours in total for the 4 weeks. Now we need to review the averaging period overtime hours. Those extra shifts are now going to impact the average weekly hours for this employee. The averaging period hours average 49 hours per week, which exceeds the overtime threshold of 44 hours per week on average. Let's calculate the average hours worked in excess of 44. We'll take 49, which is our average, subtract 44, which is our threshold, and the result is 5. 5 hours of average weekly overtime. Now you might be thinking that 5 weekly overtime hours is the same as 5 daily overtime hours, but we still have to complete the calculation by multiplying the average weekly overtime hours by the number of weeks in the averaging period. So we need to take 5 hours of weekly overtime, multiply it by the 4 weeks in the averaging period, and our total is 20 hours of averaging period overtime. The employee must receive the greater amount between daily or averaging period overtime and therefore should receive 20 hours of averaging period overtime as it is greater than the 5 hours of daily overtime in the same period. If you recall, daily overtime is paid at the end of the pay period and averaging period overtime is paid at the end of the averaging period. If the employer already paid daily overtime previously, then they should subtract that payment from the 20 hours total. And we'll go into this type of scenario next. As I just mentioned, daily overtime, if applicable, is paid at the end of the pay period in which it was earned, and averaging period overtime is paid at the end of the averaging period. In this scenario, standard overtime rules apply. We'll reconcile overtime paid within the pay period and see how it impacts overtime payable at the end of the averaging period. The averaging period is 6 weeks long, with the regular pay periods occurring every 2 weeks in blue, gray, and blue again. On Sunday in week 2, instead of working 8 hours, there was an accident and the employee works for 12 hours. This results in 4 overtime hours. The next day, the employee had to stay late again and worked another 12 hours. This is 2 hours of daily overtime. This impacts the total weekly hours, changing it from 46 to 52. If we add up all the other hours worked in the first pay period, the total is 98, where 92 are regular hours and 6 are overtime hours. The employee should be paid this within 10 days of the end of the pay period. Weeks 3 and 4 go by without any change to the scheduled hours, no extra shifts worked, so the employee worked and received 92 hours of pay at the regular wage rate. In the next pay period, the employee comes into work on a day off. They are scheduled to work on Sunday in week 6 and work 8 hours. As the new 8-hour shift becomes the overtime threshold and there were no hours beyond work beyond 8, there is no daily overtime amount for this day. The total weekly hours change from 40 to 48. The 2-week total is 88 regular hours. However, as the averaging period ends after the 6th week, we have to do a few calculations to determine how those 8 hours on Sunday, although no daily overtime was owed, impacts the averaging period overtime. So let's make some room. Now we're looking at the hours worked. We must add up all weekly hours to find the total hours for the 6-week period. This number is 278. We take 278 divided by the number of weeks in the period, that's 6, and we get a total weekly average of 46.33 hours per week. We know that the weekly threshold for overtime is 44, so we must subtract 44 from the 46.33 hours to determine how much weekly overtime there is. So 46.33 minus 44 is 2.33 hours of overtime per week on average. We then have to multiply this overtime number by 6, the number of weeks in the averaging period, to get the total averaging period overtime. So 2.33 multiplied by 6 is 14. Now we have the averaging period overtime of 14 hours. Overtime is paid on the greater of daily or averaging period overtime. However, we've already paid 6 daily overtime hours on this total. It was paid in pay period 1. So we subtract that amount. 14 hours minus 6 hours already paid equals 8 hours total. So 8 hours remains as the total overtime owing for the averaging period. The last pay period of 88 hours would be paid out at 80 hours regular and 8 hours of overtime. I understand it's a lot of math to determine that the 8 extra hours the employee worked on Sunday in the 6th week was 8 overtime hours. However, if there were missed shifts or extra hours worked anywhere else, we know that this calculation could change. Additionally, the original schedule showed that the average weekly hours before any changes was 44. So in that case, we know that any extra hours worked beyond the schedule will be overtime if no shifts are missed within the averaging period. Awesome, so we got the math out of the way. I would recommend reviewing our averaging arrangement module in our toolkit on our website for some other examples. Next, we'll look at compressed work weeks, hours of work averaging arrangements, and flexible averaging arrangements, which have all been repealed. Let's have a look what that means for people who still have these in place. Compressed work week arrangements were originally repealed on January 1st, 2018. Although averaging arrangement rules were repealed again on November 1st, 2020, there may be some compressed work weeks that are still valid that were in place prior to January 1st, 2018. These arrangements that have lived through the repeals may only be valid now if they're part of an employment standards variance or the CWW was entered in through a collective agreement. For those CWWs valid through collective agreements, they remain valid until the earlier of the termination of the compressed workweek arrangement or the day a new collective agreement is entered into. We also had hours of work averaging agreements, or HWAAs. As of November 1st, 2020, new HWAAs cannot be utilized. HWAAs that were effective prior to repeal are still valid though, and remain valid until the earliest of the following. If not part of a collective agreement, then the earlier of the day the averaging agreement terminates, or the day the agreement is canceled. If the HWAA is part of a collective agreement, then the earlier of the day a subsequent collective agreement is entered into, or the day the HWAA is canceled. Either party to an averaging agreement may cancel the averaging agreement by giving 30 days notice to the other party. The cancellation of the agreement is effective at the end of the 30-day notice period. If an HWAA is between an employer and a group of employees, the employees may cancel the averaging agreement only if the majority of the group consents. Where there is a collective agreement which provides otherwise, the cancellation of the HWAA must be in accordance with the collective agreement. Flexible averaging agreements, or FAAs, can no longer be entered into after September 1st, 2019. FAAs that currently exist are agreements between an individual employee and an employer. Different rules apply to existing FAAs depending if they are part of a collective agreement or not. When an FAA is not part of a collective agreement, it's valid for 2 years or until it's canceled. When an FAA is part of a collective agreement, it's valid for 2 years or until it's canceled or until a new collective agreement is entered into. For the most part, there are not many FAAs left in practice. As the 2 years is the maximum for FAAs, by September 1st, 2021, there should not be any FAAs at all. Employers and employees may renegotiate or cancel the agreement at any time. Once it's canceled, it cannot be re-entered into. Either party to the FAA may cancel it with 30 days notice. Cancellation takes effect at the end of the averaging period in which the 30-day notice ends. If a collective agreement is in place, the cancellation must be in accordance with that collective agreement. The Director of Employment Standards may cancel the FAA at any time after considering any factors the Director deems relevant. This may include whether the employer has a history of non-compliance with employment standards, if the employer has outstanding enforcement actions, and any other factors. If the Director cancels an agreement, the employer will be notified and can appeal the Director's decision. Please see our website for more information about filing an appeal. Let's wrap up today's session. We'd cover so much on averaging arrangements: notices to start and end an arrangement, scheduling and scheduling changes, overtime requirements and banked overtime, and finally some examples that hopefully got your mind buzzing in a good way. That is a lot of information, so review the recording again if you need to, and review our website as well. There are a lot of resources out there for you to find more information. Please remember to visit our website, and the full link is shown here for your reference. There you'll discover e-learning tools, find recorded webinars, and learn more about upcoming dates of future live webinars. The Queen's Printer is responsible for providing copies of the Employment Standards Code and regulation. Please also review our Permits and Variances section to review how you can apply for exemptions or exceptions for you and your business. If you need to file a complaint, you can go to our website with the web address on your screen. If you want to contact us or ask a question, please use our contact page listed on this slide. Additionally, you can utilize our contact center toll-free at the number listed as well. If you want to share an anonymous tip with Employment Standards, the link is also provided. Now that's the end of our session. Thank you for tuning in and have a great day.